Hi, and once again, welcome Geeta for joining us at India Economic Conclave. I remember 3-4 years back, we met at India Economic Conclave, and that time, there were headwinds, and you had predicted a sort of a slowdown of Indian economy. We have come a long way from there, and it's a pleasure that now when the country is at an inflection point, we are once again joined by you. So ladies and gentlemen, please give her a huge round of applause. I think Finance Minister has set the tone for our conversation, and incidentally, that was my first question. Tariff and trade is being weaponized, as we have seen. The global economy is witnessing fragmentation, be it tariff wars, supply chain realignments, and even geopolitical tensions. Do you think that this is a structural shift? This phase is here to stay, or eventually it will fade out?
Thank you, Meher, for having me speak at this conclave. You really picked probably the biggest issue of the day, which is geoeconomics. To your question of, are we in a structurally changed world? The answer is yes. So we have decisively moved away from the last, I would say, 50, 60 years of global economic integration that relied on countries bringing down tariffs, global trade growing substantially, especially in the 1990s and the early 2000s. Moved away from that. We are now in an environment where countries are not just thinking about economic efficiency, but they're also thinking about national security, and also how to build resilience in their global supply chains. And I don't think we are going back from where we are now. But that said, in a sense, 2025 was a year when both everything changed, with the US raising tariffs to levels that we haven't seen in 100 years. But at the same time, it looks like nothing changed if you look at global growth. Let me just take the case of India. So if you look at the IMF's projection for growth for India in 2024, that was last year, this was October 2024, they were projecting what growth was going to be in 2025 for India. This is before the elections in the US and everything. The growth was projected to be 6.5% for India this year. This October, the IMF revised up India's growth for 2025 to 6.6%. But that came in before the second quarter growth numbers came out. So I expect they will move up to 7% the next time they come up with their numbers. So India is actually doing better than was predicted before the crisis. There are important reasons for that. I think the world has shown a lot of resilience, different parts of the world for different reasons. I believe artificial intelligence has been a big offset for tariffs around the world. The spending on it has supported growth everywhere. So I don't think the lesson to take away is that high levels of tariffs are not a problem for the world. They are consequential. And I would say that the next couple of years, we will continue to see some of the drag from this geoeconomic environment that we're in.
Right. Before I move on to my next question, are you saying, because you mentioned about the GDP growth in last quarter and the quarter before that, considering that, is there a case for upward revision as an economist for you to revise India's growth forecast upwards?
Depending on where you're starting. So yes, I would say that the IMF's number was 6.6%. That's where they came out in October. But their forecast for the second quarter fiscal in terms of what the growth would be was much lower than what it turned out at over 8%. Just doing the math, I would expect that they would go up closer to 7%.
All right. Coming back to tariff wars. Especially the tariff situation between major economies has disrupted global trade in 2025, or at least the typical trade norms. What are the long-term risks of, sustained tariff battles for growth, global growth and inflation? And secondly, when we look back at 2025, can we now say that the worst is behind us as far as tariff wars are concerned?
So first thing is we should have a good sense of what the tariff numbers are. So the headline numbers in terms of what the statutory tariff rate in the US is 18%. But if you look at the data, and if you look at actually tariffs that have been collected and use that to calculate the tariff rate of the US is closer to 10%. So it's about half of what the headline number is, right? So it's not as bad as it seems. Secondly, there has been much less retaliation than was feared in the past. It was expected that there would be many more countries that would retaliate. Europe did not retaliate. The important exception is China. China is the only country that's really gone toe-to-toe with the US in terms of tariffs. So the rest of the world, tariff rates average about 4%, right? So tariff rates have gone up substantially, but still are not at extremely high levels. I do think that, at least from the US perspective, we are past peak tariffs in the US for a couple of reasons. One, and I think the important piece, is that 2026 is a year of midterm elections in the US. I don't think there's anybody who wants to have a lot of uncertainty in the run-up to the elections. Tariffs have raised prices in the US. They've pushed up inflation by about 0.7 percentage points. So that cost of living increase is a problem for affordability. So that also dampens, I think, the incentive to raise tariffs further. And lastly, there was important legal challenges to the tariffs in the US, which I think will also scale it down. So from the US tariff perspective, I suspect we are, if not past the peak, but definitely close to the peak. The rest of the world, on the other hand, I do think is grappling with a large amount of imports coming out of China, because China has redirected their goods out of the US to the other parts of the world. So we could see more tariffs being imposed, for example, on trade with China in the future.
As far as India is concerned, you think the peak is behind us? Because we are already at the receiving end, highest tariff in the world.
No, India has at this point the highest tariff rate among all of the US's main trading partners. So, and I just don't see how this will stay at this level. I expect that it will go down. It will take negotiations. But yeah, it's already at, the sticker number is 50%, effective is about 38%. That's very high.
Okay. So, as you can see, the theme itself for this year's India Economic Conclave is navigating geoeconomics. In your view, how India should navigate this tariff situation? Because while the trade friction remains where it is, India and US remain strategic allies. And especially in the Indo-Pacific region, and if you look at Mr. Trump's social media posts lately, again, he's coming back to this whole keeping India at the center stage of Indo-Pacific and, the strategic view that US has. How India should navigate this tariff situation with US?
There's no ifs and buts. The US is a very important partner for India. And therefore, I think it is very important that both countries, both India and the US, work together to come up with a mutually agreeable solution for where they are. I think that's the pragmatic way forward. And I know that there are a lot of discussions happening in the background, and there's always the right time, and things can move very quickly. So that's the only way to move forward. I think it is to continue to build that partnership. On the other hand, India is also going about and building other trade partnerships. They have the new agreement with the UK, but also working with the European Union. I think this is something that India can continue to push on, because we are in a world where everybody's looking around for new partners. And India is in a position of strength to be able to be that partner for many more countries in the world.
Right. The finance minister, during her speech, did hint about safeguarding, domestic industry and retaining strategic economy, autonomy, fuel policy autonomy. Now that is actually in direct contrast with what maybe US wants as a part of the Indo-US trade deal. How do you see that playing out?
I think at this moment, probably for India, this is an easy decision, frankly, because the price of oil is now, I looked at just very recently, it went below $60 a barrel. At that price, well, in a sense, it's not a big trade-off between the economic security and the national security aspect. So there's going to be a lot of cheap enough oil in the market. I think India can decide where it wants to buy its oil from. But, there was a time a few years ago when Russia invaded Ukraine and oil prices shot up dramatically. And at that time, actually, the US encouraged India to continue buying oil from Russia because they didn't want the whole world to be moving away from Russia because that would raise prices everywhere. We're not in that situation now, and oil prices are down to $60 a barrel. I think it's a good time to figure out, maybe there are other countries to buy from.
So are you saying that Mr. Trump's tough stance as far as Indian oil purchase from Russia is concerned is directly linked to oil prices? As they soften, Mr. Trump's stance hardens. Is that how it's playing out?
I don't think so. I'm basing this entirely from an economist's perspective. I'm just saying that, in a sense, the trade-off is really not that big for India, given where oil prices are globally.
Right. You did mention about probable or maybe a possibility of further trade war escalation with China from US. If that happens, and as we already know, the global supply chains are diversifying, and there is a clear conscious effort to move away from having over-dependence on any one single geography or country. Now, how well positioned is India to capture this opportunity compared to, let's say, peers like Vietnam or Mexico, and there are a host of other countries who are trying to be part of the diversification in supply chain?
Yeah, just to be clear, I don't think that the US is necessarily going to escalate their tariffs on China. The US depends on China for rare earths, and that is becoming a big, important deterrent. I was talking more about other countries, like in Europe, where this could be a factor. What India needs to do in terms of tapping into the global supply chain is continuing on the path of all the big reforms that it needs for its own internal growth, right? And as was mentioned by several people, including the finance minister, the improvement that we've seen in physical infrastructure and digital infrastructure in India is super helpful, and that should continue. But that needs to be then complemented with other ongoing reforms. I think one big hurdle for India to be a big industrial power is land acquisition. That remains very complicated. Land titling is not clean. It's very hard to acquire land in India. That is an important constraint on how fast you can build out. And that is, I believe, an important constraint on growth. Now, there are states that are actually doing innovative things, like Andhra Pradesh, I think, has some very innovative policies in being able to hasten land acquisition, and policies of those kind can be helpful everywhere else. So I think that's one area where this is required. Second, of course, is deregulation. India remains to be it's still a tough place to do business. I mean, there has been improvement, things have gotten better, but there is still a lot of regulation, a lot of bureaucracy. Corruption is still an issue, a big issue. And so addressing all of that is going to be critical if India has to become a major player on the global stage in global supply chains.
Which are the other major bottlenecks? You did mention about land reforms, and actually the government did try, and they took one step forward and probably 3-4 steps backwards, not 2. And obviously the other issues from ease of doing business lens. What are the other bottlenecks? Is it labor reforms? Is it other structural reforms?
Yeah. When it comes to labor in India, we've long talked about the demographic dividend. But if you look at India's growth since 1980, 40 years plus, only about 30% of that growth has come from India's labor force. Most of it has come from capital accumulation and productivity growth. So in a sense, India hasn't really had a big demographic dividend. Even though the population is big, the workforce is big, it's still only about 30% of the contribution. And there are two sides of the coin over here. One, of course, is in terms of labor market policies. Thankfully, recently they've gone ahead to implement the labor codes, and that's really good. I mean, raising the number of employees you can have from 100 to 300 before you have to hit the constraints is helpful. Though, of course, if you want to truly be a big player, you're talking more in terms of thousands of workers, not in terms of hundreds. But again, the direction of travel is very good. And then there's the other side, which is the skilling and the level of human capital that there is for the Indian worker. And that, again, falls short of what is needed. I mean, there is evidence that if you can increase one more year of formal schooling for a person in India, you end up with their incomes going up by 6 to 7%. So these are very substantial improvements. Both of those are needed. I was recently reading about the model that's there in Gujarat in trying to improve schooling. I think it's called the Education Command and Control System, which is basically tracking teachers and students and also their performance using AI and machine learning to figure out their performance. And that certainly is, again, one way to be able to raise education levels in India.
Right. While India has undertaken major reforms, be it GST or digital public infrastructure, and now, I mean, at least there is a new renewed effort to unleash the next wave of labor reforms. There is still, and in fact, Nirmala ji also referred to it, there is a sort of a disconnect between the central policy and sometimes the state policy. Then there is the whole issue of obviously the fiscal balance and, especially at state level. And if you look at debt of some of the states, it's quite alarming. How do we address that and have one uniform policy?
No, I completely agree with the minister on what you said about the fiscal situation in India. The union government is doing a very good job in terms of building credibility on the fiscal front, sticking to their spending targets, making sure the deficits are within what's being projected. So India is gaining in terms of credibility because of what's being done at the union level. Unfortunately, the state governments aren't helping with India's credibility. There are many state governments where you have excessive borrowing that's going on. They're not able to maintain their projected path of spending and revenue. So there is this issue. How does one address it? I mean, the way you address it is by basically incentivizing states that are prudent, that are maintaining good fiscal policies. You incentivize them in terms of how much resources they will get from the union based on your performance. There's not that much of incentivizing at this moment. So I think more that can be done to incentivize the states to maintain fiscal discipline. That's where you're going to play an important role.
Right. Geeta, I've been reading lately what you've been writing on AI. And obviously, everybody in India is very curious about AI. While it's expected to transform, productivity, it's definitely going to also disrupt labor markets, especially in Indian perspective. How India should prepare for the AI revolution, keeping in mind the job scenario, keeping in mind the required growth scenario, and keeping in mind the population.
I think this is going to be a very important challenge for India for the reason that I also said earlier, which is if you look at the contribution of labor to growth in India, it's only been about 30%. So you need to find new ways to have productive jobs. If India goes from capital-intensive manufacturing to capital-intensive services, then I don't know where the jobs will come from. So that is a tricky one. In terms of the numbers, the estimate is about 26% of India's workforce is exposed to AI. The average for the world is about 40%. So 40% for the world on average, 26% for India. 26% because if you look at where most of India's labor is, 40% of India's labor is still in agriculture. So it's not that exposed to AI. But it's 26%. The exposure doesn't mean it's a bad thing. It's about 50-50. About half of that will benefit from AI. The other half will suffer from AI. There are also estimates that have been made about what the potential impact on productivity growth could be of India AI adoption, and it ranges from like 0.3%, 3%. So it's a pretty big range, but it can be very substantial too. What will it take? I think in the case of India, digital public infrastructure, more build out, that's going to be absolutely critical. And then human capital, skilling. I mean, having the ability to actually use this technology. Also in the case of India, the fact that there are shortages of certain kinds of skills, like in healthcare, it helps. AI will be very helpful in expanding the access to healthcare. Similarly, in terms of education, to raise the quality of education, you could, again, use AI to be able to improve close some of the skill gaps that exist. But this is not going to happen automatically. I think it's going to require actually a pretty thought-through strategy.
Right. You did speak about sectors which may benefit from AI, but what about sectors which will be at the receiving end in terms of jobs in India?
I think everybody seems to agree that coding is one area that is getting swallowed by AI. I think the demand for just simple people who can code is just not there anymore. It's just, you can do it very easily. You can use text-based languages and instructions to generate the code you want to do. So I don't think coding is going to be a big field. And that, I worry a little bit about that because there's a large number of engineering schools in India that basically put out some people who can code, and that's not going to cut it.
Right. So are we looking at a scenario where the inequality could widen because of AI adoption, and if it starts outpacing the skilled labor force creation?
The AI is actually has a bit of an interesting impact on inequality. Unlike other kinds of previous technologies where it was absolutely clear that the people who were the most skilled were going to benefit from AI. Now we are seeing that even less skilled people, if you work at a call center, for example, you can get a very friendly chatbot to help you, talk to a client or a customer more easily. And so you do see sometimes the lower end of skill also benefiting from it. So it's a bit of a mixed bag, but what is still very much the case is that rarefied 1% at the top in terms of skills will gain a whole lot more than pretty much anyone else from AI.
Right. The other factor that Finance Minister referred to was the demographic dividend. In fact, Mr. Vaidyanathan also spoke about it. It's a very risky balancing act, according to a lot of economists, that it can, very easily turn into a liability as well from dividend, the demographic dividend. How do we manage that?
So this is what I mentioned earlier, which is that, in a sense, it's not been a labor-based growth story for India, right? It's only been about 30% of India's growth has come from labor. And how does one get to the next higher level? And that's going to require both sides of the equation. One is improving the skills of workers, the level of human capital, and then the other in terms of labor market reforms. So the IMF did this interesting analysis where they said, what if India's labor market flexibility was as good, or rather moved up to the level as, say, Mexico and Brazil, which, other emerging markets, so it's a comparable group. And the estimate that they put was that could add about 44 million jobs between now and 2030. So it is both a combination of the level of skill, but also the ease with which you can hire workers and you're able to grow in size.
I'll now touch upon, geopolitics. And it's a very sensitive issue for India, so I'll start with that, and then we can probably move on to Ukraine and Mr. Trump. There is a lot of sensitivity in India about the way IMF has been treating Pakistan. And, there is a sense of belief that IMF is not doing enough to hold Pakistan accountable for the reforms and the economic prudence that ideally they should be displaying. I know you will not speak on behalf of IMF, but what is your view?
So the IMF has a responsibility to help countries that are in an economic crisis. It is the requirement of the IMF to do that. And countries that are in economic crisis are in a crisis for multiple reasons. It's not just because of macroeconomic policies that go wrong, but it's also there's social conflict, there are conflicts at their borders. That's the candidate country that is coming to the IMF for financial support, right? And so therefore it is always an important and careful decision that has to be made about, can you help the country? Can you truly improve its macroeconomic situation despite everything else that's going on? There's a set of policies extremely well argued through. And by the way, these policies are signed off not by IMF management, but by the members, by its 195 members countries. So there's a well-defined set of policies that are accepted, and you have to implement based on that. So it's a bit of a checklist, and you say if XYZ is met, you have to go ahead and disperse to the country. So, I mean, that's all I can say. I mean, those are the criteria that get used.
But there is a sense of disillusionment in India about how Mr. Trump is warming up to Pakistan. Do you think it's a passing phase, or it's there to stay? Because he has been bringing in everything, investing in Pakistan, the energy security, rare earth, and whatnot.
Yeah, no, I think I would not claim to be an expert on President Trump's, feelings or views about individual countries. I do think that that's something that probably can change over time too.
But do you also fear his morning tweets, Mr. Trump's?
I think, we've gotten used to it.
Okay, yeah, because Howard was at the receiving end for a very long time. But, okay, that brings me to the H-1B issue. And that's a very critical one and very sensitive for India. What is your view on this whole H-1B policy and the way Mr. Trump has been going after, the quota that India receives from H-1B quota internationally? What is your view on that?
So, I mean, just firstly, we should put things in perspective. H-1B visas as a share of the U.S. labor force is tiny. These are very small numbers. Now, it's just that 70% of those visas go to Indians. And so that's why the Indians are particularly conscious of what is happening over there. President Trump actually, compared to several of the other people in his party, does believe that the U.S. needs talent from other parts of the world. Right? So there is, in fact, a push to simply end the H-1B visa program. And Trump has said, no, we need it because we need to get highly skilled people from all the parts of the world. But we're just going to put the bar higher, so we're going to require a $100,000 fee to make that happen. I think what we all have to get used to, and I think this is another structural shift going forward, is that the world is not going to be as an attractive place for immigrants, just more generally. And by world, I mean it's not just the US. I think it's true in Europe, it's true in Canada, it's true everywhere. The UK, there has been an important sentiment shift everywhere in the major economies, where the attractiveness of immigrants and what they bring to society, I think, is raising a lot of issues. And so we may be past peak immigration too in the world. I do think this is, again, not just a U.S. phenomenon. I think it's very broadly true. This is one common factor you see across almost all countries, is this pushback against immigration.
So you are predicting a major structural shift. Rather, you are presenting one major structural shift, which essentially means that especially large countries and economies like India will have to create enough jobs to sustain domestic growth and to create enough employment for its skilled labor force. Do you see that happening in India? Because you did mention that you are tempted to revise growth forecast to 7%. But is 7 to 8% range enough for India? Because nobody is talking about double-digit growth now, at least in India.
Again, I think if India can maintain growth rates of like close to 8% for 20 years, then you're getting much closer to the 2047 goals, right? But it is not easy to maintain even 8% growth for a 20-year period on a sustained basis. That is going to require sustained reforms on a year-on basis. Otherwise, it won't happen.
And do you see Chinese economy bouncing back? Because they have been struggling, and for quite some time, India has remained the fastest growing large economy. It is likely to remain for at least foreseeable future. But how do you see the Chinese economy playing out on global stage?
Yeah. So China's growth actually this year is supposed to be 5%, which is very good, given that China is about 4 times the size of India, and also given what happened in terms of tariffs. This is one of those examples of where everything changed and nothing changed. This is they've done well. But that said, there are some deep structural issues that need to be addressed in China. The property market crisis has gone from bad to worse, which is unfortunate because they've done a lot to try and prevent that from happening, but it's actually getting worse. Similarly, if you just look at consumption spending, that's not holding up well. Consumer sentiment is weak. So if you're looking at medium-term growth for like 4 or 5 years out, growth in China is more predicted to be around 3.5% or so, between 3.5% and 4%. So it is a weakening growth outlook, and it's going to require some real shaking up.
I'll now move on to climate. That's the other major issue after AI. And the climate change is creating a lot of challenges, and obviously there is an increased economic and financial risk. But for a country like India, which needs a lot of energy, which is far behind in per capita energy consumption compared to, let's say, China or US, how do we balance between our ambition of being a developed nation by 2047 and still remain climate conscious, and then go ahead and meet being carbon neutral, ambition by 2075? It's a very tricky balancing act.
Yeah. I actually don't see this as a big trade-off for India. So let me tell you, we're all sitting here. The air quality outside is hazardous by any metric that you look at. So if you look at the impact of what that is doing to the Indian economy in terms of the effect on health. So this is a very nice study that was done that looked for a particular year, it was 2019, looked at the effect of air pollution only, air pollution on premature deaths in India. That number is 1.67 million deaths. That's 18%. 18% of the deaths that happened in 2019 were attributable to air pollution. That is every year. And it's gotten worse since 2019. So, and then if you look at the effect of this on just morbidity, right? Health, lung cancer, heart disease, and so on. And you look at the economic cost. In terms of today's dollars, that's about, for the Indian economy on an annual basis, about $60 billion. To put that in perspective, the tariffs that India is facing from the US, the effect on the Indian economy is about 1/4 of that, right? And it's going to go away. It's going to go away in a couple of years. But this is not going away. So whatever India needs to do to have cleaner air, it goes along with having renewables, which of course a lot of progress has been made on that front. But if this air quality situation is not addressed frankly on a war footing, it's a big knock to India's growth.
Right. Okay. So let me put it this way. Because we have an ambitious goal that Mr. Prime Minister has set up for India, that India will be a developed nation by 2047. If you had to flag, one risk and one major opportunity for India in the new geo-economic era, what those would be?
I think that the risk and the opportunity are the same thing here. The opportunity is for India to continue on the path of steadfast structural reforms, to then be able to deliver higher standards of living for all Indians, better air, better health. All of that will be important. The risk is if that stalls. The risk is, and that is not something that has not happened in the past, it's very common for countries to end up basically, you don't have any more reforms, there's reform fatigue sets in. If that happens, then that's a lost opportunity.
Right. So, in a world which is sort of marked by fragmentation and uncertainty, do you think India has a unique opportunity not just to grow faster, but to even shape the rules of the global economic order?
Again, as was Vaidya also made this point, which is that as India grows in terms of growing at 8%, the macro stability that it demonstrates, all of that gives it a very important seat at the table. And as we know, it's only a matter of time, maybe 2 or 3 years, before India is the third largest economy in the world. So nobody ignores India. It's absolutely critical to the global order. India plays a very important role on the global stage. I think it did a phenomenal job when it had the G20 presidency. It did really a very big job in terms of addressing global debt issues, but also the topic of crypto and how to regulate crypto, which continues to be an issue to this day. So India has been able to leave an important stamp. It has strong leadership, it has strong diplomacy, using both of that to continue the conversation, to bring together other emerging and developing countries, to put their needs out there. I think India should play an important role.
Right. Since you mentioned crypto, what's your view on crypto and how that part is going to play out going forward for all economies, not only India?
Yeah. So obviously the crypto space is evolving over time. You have the Bitcoins of the world, and they go up and down in terms of value. The new kid on the block are stable coins, which are basically cryptocurrencies that have stable values. The dollar stable coin is the overwhelming stable coin of what we have here in terms of the stable coin market cap is about 300 million. The vast majority is in dollar stable coins. In this particular case, unlike Bitcoin, where I worried less about loss of monetary sovereignty and other things, I worry more about that when it comes to stable coins. Because stable coins come closest to what seems like money, though they're not exactly money. They come very close to it. And if you look at the data, and you have to do a fair bit of forensics to understand this, because it's not easy to just simply know where the money is going, most of the holding of stable coins in dollars as a share of the country's GDP is basically in countries with high inflation. It's in Latin America where you have the holding of stable coins as a share of their GDP, right? So I do think all countries, and this is going to be true for India too, should have should think of how they will address concerns about capital control evasion, of capital flows that evade the rules and the laws of the country in this environment, in this case of stable coins. So I think this is required.
Right. One last question, Geeta, before we wrap this up. What made you move from IMF to Harvard? We were hoping that you will go right up to MD's position in IMF, and then suddenly you sort of decided to go back to Harvard. Yeah. Why is that?
Yes, so these are not permanent jobs. In terms of becoming managing director, so, practice, it's not the law, but practice is that the head of the IMF has a European passport, so it's from Europe, and the head of the World Bank is American. So, I don't have a European passport, so that's out of the question. But more importantly, I spent 7 years at the IMF, first as chief economist, and then as first deputy managing director. Before that, I was at Harvard. I was a professor at Harvard. And in a sense, for me, 7 years was a good time. I got to be in the policy space at what was pretty challenging times for the world. And of course, it still remains challenging. But it was a huge learning experience. But I always expected that I would return to academia because I do love the research side.
It's a little surprising because you said it's not a law, but it's practiced that the World Bank head would be an American and IMF head would be a European person. Isn't it time that those practices are revised, considering the growth situation and considering how the center of gravity is rapidly shifting towards, let's say, global south, if not India alone?
So I think this is something everybody agrees on. I've sat in enough board discussions at the IMF and at the World Bank where everybody clears their throat and says, yes, we should be looking at other nationalities for heads of these institutions. There's support from plenty of circles, but it takes some doing to make it happen. So it's not going to happen. There's no set date for it. It's not going to happen organically. It's going to require the other nations of the world to decide that they have a candidate that they would like to put forward and they would support. And that is often not the case.
So maybe US and Europe and World Bank and IMF, they need to walk the talk and do some sort of reforms. Geeta, before I wrap, I'll just check with the audience if they have any questions. Otherwise, it'll be a wrap. Do we have any questions? Anybody? Yeah, can we have mic here, please? Quickly. We'll just take 2-3 questions. Yeah.
Hi.
Can you stand up? Identify yourself. Yeah.
So my name is Bhaskar Sharma, and I own an e-commerce company. Means where I sell cosmetics products.
Just hold mic closer. Yeah.
Okay. So I own an e-commerce company where I sell cosmetics products, and I just want to know that you just mentioned about AI will it will shatter the jobs. Yes, it will shatter the jobs of content creators too, because as an like e-commerce owner, I am making content with the AI generation.
So you are saying content creation will undergo a change because of AI. Yeah. Geeta, you want to add to that?
I think it is actually going to help content creation. AI helps you with content creation.
I am saying that it will shatter the jobs of content creators who are creating the contents.
So he's saying that the content creators will have a problem because AI will create content. I hope it's not a problem for us going forward. But yeah.
The way technology has always affected jobs is that it creates new kinds of tasks and jobs. So one of the things that we are seeing is that previously people who would go and take a salary job are actually now using AI to come up with new ideas for creating new companies. Now you're right that whoever is like a plain standard content creator who is not able to compete with AI could suffer from it. But I actually think in this particular case, whenever there is this, in terms of starting new businesses, starting new ventures, for a lot of people, AI is a very helpful tool to be able to move forward.
Right. Any more questions?
Yeah, please.
Yeah, just 2 more questions. Yeah, go ahead.
Well, Geeta is kind of really worried about the pollution outside. Being an Indian myself and part of the world, I'm kind of worried about the global crisis in terms of the US debt, which is about 37 trillion. Any comment on that?
I don't see why we have to connect it to pollution, but sure. So US debt, yes, is very high. It's over 120% of US GDP, and this is a concern. Now, if you look at the US cost of borrowing, so 10-year US Treasury yields as of around 4%, a little over 4%, that's still low when you compare to the level of debt that is being issued. So there remains a lot of faith in the US government's ability to repay its debt and also not to basically end up with very high levels of inflation. That remains the case. It is, however, something that has to be paid close attention to. I mean, when I was at the IMF and pretty much every organization, including independent organizations in the US, have made the point that US debt is on an unsustainable path. A lot more needs to be done. It is not something that's imminent. It is certainly not one of those things that you would expect to see a big change in appetite for US debt in the next 2-3 years or even the next 10 years. It's going to take a long time. But it requires action, which I don't see happening at this point.
Right. One last question, then we'll wrap. Last question, please. Yeah.
Hello, ma'am. I am Dev Vaibhav. I'm an engineering student from Amrita Vishwavidyapeetham. In your speech, you mentioned that India's labor force participation in India's growth is around 30% of that. So as an economist, considering the situation of demographic dividend in India, should this portion go higher or lower?
No, it should go higher. This is 30% is quite low, right? For countries at similar levels of development in India, it's more like 60% of growth comes from the labor side, right? Not from capital. So India is way more capital intensive than other countries at this level of development. So yes, the answer is it has to go up much more.
All right. Geeta, thank you so much for coming here and sharing your insights with us. It has been a pleasure. Thank you so much.